Imagine losing your business, your personal savings, and even having your Social Security benefits garnished, all because of one missed SBA loan payment. That's the reality for thousands of small business owners every year, and most never see it coming. So what really happens if you default on an SBA loan, and is there a way out? Let's start with the basics. What does it even mean to default on an SBA loan? Default kicks in when you miss payments, make only partial payments, or otherwise fail to meet the terms of your loan agreement. It's not just about being late. It's about breaking the terms you agreed to when you got that much-needed business boost. So what happens first? You'll get a written notice from your lender, a demand letter spelling out that you're in default. Many people ignore these, hoping things will blow over. Big mistake. This is the moment to communicate. Contact your lender, explain your situation honestly, and see if you can work out a payment plan or a temporary solution. But what if you can't pay at all? Here's where things get real. The lender is allowed to seize any collateral you put up for the loan. Think about your business inventory, equipment, maybe even personal assets like your car or home, depending on what you signed as a guarantee. If that's not enough, the lender can file a claim with the SBA and the government steps in to cover their guarantee. But don't think you're off the hook. Now the SBA comes after you directly. You'll get a 60-day demand letter from the SBA, and if you don't respond, your debt can get transferred to the U.S. Treasury Department. That's when things get even tougher. Wage garnishment, bank account seizures, even your Social Security or retirement benefits could be targeted to satisfy the debt. Is bankruptcy an option? In some cases, yes. Filing for bankruptcy may help protect some of your assets, but it's a complicated process and doesn't always wipe out SBA loan debt, especially if personal guarantees or fraud are involved. Always talk to an attorney before considering this path. What about negotiating? There's hope here. If you can pay part of what you owe, you may be able to settle through an offer in compromise. This means you negotiate to pay less than you owe, often in a lump sum or installments. The catch? It's much easier to settle before your file gets sent to the Treasury. Once that happens, negotiating becomes far more difficult and the government's collection powers are much stronger. How badly does a default hurt your credit? The answer is a lot. Your business and personal credit scores can take a major hit, making it much harder to get financing in the future. Think of it like a scar that lenders will keep seeing for years to come. Can you bounce back? Absolutely. Many entrepreneurs have survived SBA loan defaults and rebuilt their businesses and credit. The key is to act early, communicate openly, and explore all possible solutions. Don't just wait for the worst to happen. So, what's the smartest move if you're worried about default? Reach out to your lender at the first sign of trouble, consider professional help, and don't wait for demand letters to pile up. There are options, but the window to act is small. Because defaulting on an SBA loan can devastate your finances for years. The next video reveals a little-known benefit, how you might be able to write off SBA loan interest on your taxes, saving money even in tough times. You can't afford to miss this. See you there.